to Mark Gibson Shumaris channel. Accountant with designations CPA, MBA, CMA, ACPA, ASA, Australia. Enjoy learning!
Once again, a pleasant afternoon, everyone, and welcome to your Advanced Financial Accounting and Reporting class. Today, we'll discuss consolidation subsequent to the date of acquisition. So consolidation, by definition, it is a process in which the assets and liabilities, equity, income, expenses, and cash flows of the parent and its subsidiaries are presented as those of single economic entity. Now, if we consolidate all of these elements, we call this consolidated financial statements. No? So remember, in our previous discussion, diba, we have establish the relationship between a parent and a subsidiary. No? So basically, if an entity takes over 50% or more than 50% of an entity's share, so essentially it takes over control over that entity. No? So we have the acquirer and the acquiree. Now, since the control is present, no? So we say that it's best to think as the relationship between those two entities as parent and subsidiary. No? So in today's section, we're going to prepare the consolidated financial statements. No? So when we say consolidated financial statement, basically this is all the financial statements of the parent combined with with its subsidiaries. No? So in parang in real life scenario kasi, the parent will prepare its own financial statements. No? The same with all of its subsidiaries. So meron silang separate financial statement. No? So basically in consolidated financial statement, we're combining the parent and all of its subsidiaries into one consolidated financial statements. Now, there are working paper entries. No? So meaning, there are entries that are not present in the parent's books and subsidiaries books, but are required in order for us to complete the consolidated financial statements. So later on, pag-uusapan natin yan. Okay, so let's talk about this pro forma consolidation net income or consolidated net income. No? So in here, what we're going to do is we'll have two columns. No? So we have consolidated net income attributable to the parent and non-controlling interest. No? So plus this non-controlling interest. So for example, no? So si company A acquires company B. So 80%, sabihin natin 80% of the shares. No? So company A, hindi niya bilhin ng buo. No? So only 80%. Si company A is the parent and then si company B is the subsidiary. Now, yung stake na 20% na naiwan, that represents non-controlling interest. So later on, when we go through the different discussion problems, we'll illustrate this more. So how are we? So if we're going to compute for the consolidated net income, so all we have to do is, well, first we'll compute the consolidated net income attributable to the parent and the non-controlling interest. No? Net income. So paano ngayon yan? So say natin ha. So we have net income parent. This is the net income from the separate operation of the parent. No? Of course, si subsidiary, meron din siyang separate operation. But take note, we have to split this based on the proportionate share. No? So in my given example earlier, it's 80% to the parent and 20% to the non-controlling interest. Amortization of excess. So it's add or minus. No? So paano nga yung amortization of excess? So sabi natin, it is an income adjustment. So, di ba pag nag-acquire tayo ng entity, we are establishing or we are establishing the fair value for all of its identifiable net assets. No? So therefore, if there are differences between the book value or the carrying value, no? So and the fair market value, then we have to account for that as amortization excess. Okay? Impairment loss. So ito naman, 'di ba? If the consideration, no? So ito yung binayad ni parent para magbumili doon sa net assets ni subsidiary, if the consideration is greater than the fair value of the net of the fair value of the identifiable net assets of the acquiree, then it will result to goodwill. Ngayon yung goodwill na yun, per accounting standards, we have to test it annually for impairment. No? So therefore, kaya meron dyan impairment losses. No? So later on, we'll also show to you how to allocate the impairment loss. No? So we have a problem, no? Related to that. Now, pag-usapan natin itong intercompany dividends. No? So imagine, binili ni company A, gawan nga natin ang pangalan. Sige. Si P, no? So for parent, and then si S na lang for subsidiary. So si P, binili niya si S for 80%, di ba? So yun yung pag-usapan natin. Ngayon, si S, dahil nga meron siyang own operation, nag-declare siya ng dividends. Of course, that dividend will be distributed to P and other non-controlling interest. Ngayon, imagine, no? Dahil si P, siya na talaga yung owner ng S, no? Technically. Kasi nga, he owns 80% of S. So imagine if S declares dividends, so it's as if P is declaring dividend of its own. No? So in fact, in the separate books of P, ano bang entry niya pag nag-receive siya ng dividend? No? So kung cash yan, so debit cash, credit dividend income. So technically, that dividend income is already included in the net income here. No? So net income parent. No? So therefore, we have to deduct it. Otherwise, it will be accounted twice. No? So I hope na naintindihan ng maayos yun. No? So kung hindi, ulitin ko na lang. So itong intercompany dividend, this is in relation to the dividends declared by the subsidiary. So yung example natin kanina, si Company P owns 80% of Company S. No? So when Company S declares dividends, so yung 80% of that dividend will go to Company P. So si Company P naman, i-record niya sa sarili niyang libro. It's debit cash, kung magbawa cash dividend, credit dividend income. So therefore, that dividend income is already part of this net income parent. Kasi nga itong net income parent, sabi natin kanina, this is from the separate operation of the parent. So para hindi ma-double take up, we have to deduct it. Okay. Next, gain on acquisition. Itong gain on acquisition naman, we should only record this once, no, on the year of the acquisition. So paano ba nagkakaroon ng gain on acquisition? So ito lang naman yung opposite, no? So kanina, kung meron tayong na-record na goodwill, at this time, meron namang gain on acquisition. Pero tandaan, gaya ng sabi ko sa previous lecture natin, the standard requires you to revisit kung tama ba yung valuation na ginawa mo. If everything is taken up into its fair value. Kasi nga, it's very rare that we have gain on acquisition. So that's why standard requires us to re-evaluate. So, well, if there's gain on acquisition, it should be added, no, as part of the consolidated net income for the parent, attributable to the parent. Okay? So, ayan meron na tayong pro forma template on how to calculate for the consolidated net income. Well, you have to add these two to get the consolidated net income. Okay? Pag-usapan ngayon natin itong non-controlling interest. No? So sabi natin, no, um, ito yung non-controlling interest represents in my example earlier, the 20% stake of the others. No? Kasi nga, di ba, 80% lang naman yung binili ni Company P dun sa Company S. No? So, this non-controlling interest will form part of what? Of the shareholders' equity of the consolidated entity, of the consolidated financial statement. So, therefore, we have to account this. No? So, NCI beginning, non-controlling interest beginning, sabi natin dyan, this represents on the year of the acquisition, ito yung beginning balance, this also represents kung magkano yung stake ni NCI. No? So sabi natin also in the previous lecture, this could be accounted for either number one, um, full fair value or full goodwill method, or number two, partial goodwill or yung proportionate share. No? So later on, we'll also touch on that topic once again. No? But I, I encourage you to watch the first two discussions first, no? Para at least mas madali na mamaya. And then, of course, the NCI net income, this is coming from the previous template here. And then the dividend declared by the subsidiary. Pero, as to the percentage of NCI lang. No? So, in my example earlier, this will be only 20%. And then, of course, NCI ending. Now, year 2. So, for example, 2021, doon natin in-acquire si Company S. No? So, the NCI beginning represents the stake. No? So, at the initial measurement. No? But in year 2, NCI ending here will be the beginning NCI balance for year 2022. So, later on, we'll also illustrate that. In fact, in problem number 1, we'll have 2 years, no? So para at least makita natin kung paano yung flow ng transaction. And then of course, we have the consolidated retained earnings, no? So consolidated retained earnings beginning, sabi natin, in the year of the acquisition, this represent the parent retained earnings, no? And then of course, we have the CNI parent. So CNI parent, or the consolidated net income parent here, this is from the previous calculation, this one, no, class? Kaya kung napansin mo, dugtong-dugtong talaga yan. No? So, kailangan lang natin masigurado na tama yung take-up natin. Of course, you have to add all those elements. Then we can come up with the consolidated retained earnings ending. So parang ano naman siya, no? So parang sa basic accounting mo lang din, what are the factors that will impact your retained earnings. No? So yan pa rin naman. So wala pa rin nagbago. And of course, we have the consolidated stockholders' equity. So we have the share capital of the parent, the share premium of the parent, plus the consolidated retained earnings. So meaning this one. And then the NCI ending. Ayan, class, no? Kaya nga, the non-controlling interest is part of the consolidated stockholders' equity. This represents a 20% ownership, no? Kasi nga, itong share capital, share premium, and CRE, this represents what? The 80%. Okay? Of course, no, earlier I mentioned about working paper entries. So sasabi natin, these working paper entries are present, no, required in order for us to come up with the consolidated financial statements. So parang in other words, ganito, no? Si Company P will have its own operations. So, of course, Company P will prepare its separate financial statements. No? And then here comes Company S, will also have its own operation and will prepare its own financial statements. But then, since Company P owns 80% of Company S, then the standard requires to submit consolidated financial statements. And in order to do that, meron tayong mga working paper entries. Kaya sinabing working paper entries, these are entries outside of the separate financial statements of P and S. No? So ano yung mga ano-ano yung mga working paper entries na yan. So ito yung pag-usapan natin on the amortization of excess. Sabi natin, if the excess of fair value over book value, then it's understated. No? So parang ano lang naman to, kung depreciable asset na pinag-uusapan, bawa meron tayong equipment. Ang equipment natin sa ang fair value is sabi natin 10,000, book value is 5,000 lang. So it's understated. So we have to adjust for that, no? So similarly, excess of book value over fair value, it's overstated. Note, this is to adjust the items affecting the consolidated net income. So ano yung mga entries natin? So debit expenses, credit various accounts. No? If the assets or liabilities of the acquiree are understated. Ayan, meron tayong mga guide. Pero mamaya, bibigyan ko pa kayo ng cheat sheet para at least, no, while right now, or even in your undergrad, probably you have uh, understood the concept very well, no? Para at least hindi ka na mag-a-analyze. Alisin ko ulit yan, ulitin ko yan. Para at least it won't take you long to analyze it kasi nga magpo-provide tayo ng cheat sheet. No? Kung napansin nyo, that's how we approach, no, problems in the review classes like this, no? So para at least, no, mas mapabilis kasi nga imagine, no, in the CPA board exam, and in the CPA board exam, it's time pressured, no? So it's really best to have a strategy, no? So ito yung strategy natin by way of providing you with cheat sheets, no? Okay, so ano yung good example nito? So sabi natin, if the fair value of a depreciable asset is understated, so kung understated yun, edi understated din ang depreciation mo. So all you have to do is post the related depreciation. So ganun din, if the assets or liabilities of the acquiree are overstated, here are the pro forma entries. No? So ito na yung pinag-uusapan nating cheat sheet. No? So if the excess is understated, the effect of that will be the effect of that to your expenses is also understated. So ergo, net income is overstated. Tandaan, later on, ang kailangan nating i-calculate is the consolidated net income. No? So balikan natin para lang at least mas ma-appreciate. No? So remember here, no, ito yan, yung asterisk number 1, amortization of excess. Ano yung impact niyan sa consolidated net income attributable to the parent, and ano yung impact niyan doon sa non-controlling interest net income. So para nga mas mapabilis, ginawa natin siya ng cheat sheets. No? Sabi natin, kung understated yan, if the assets and liabilities are understated in the initial measurement, then the expenses are also understated. If the expenses are understated, ergo your net income is overstated. Kung overstated ang net income mo, what should we do, no, to correct your net income? You have to deduct it. So ganun din sa if the assets or liabilities are overstated, the expenses are overstated, then net income is understated. So you have to add it. So later on, pag-usapan pa natin. Also, we have to post the impairment loss. No? So impairment loss, sabi nga natin, no, the standard requires us to test the goodwill, no, annually for impairment. No? So of course, the entries are debit impairment loss, credit goodwill. Sabi natin, there will be a separate schedule, no, to calculate for the impairment loss distribution. So later on, pag-uusapan natin. Elimination of intercompany dividends. So ito yung sinabi ko kanina. Sabi natin, since it's a subsidiary is the one declaring the dividend, and parent technically owns the subsidiary having 80%, no? 80% share. So we have to eliminate that. Kasi nga, kung hindi, it will be taking this up twice, no? So remember, no, na-record mo na siya net income mo, no? Pasok siya sa dividend income in your profit and loss, and then papasok ulit siya as intercompany dividend. So we have to eliminate this, no? So debit dividend income from subsidiary, debit non-controlling interest, this representing the non-controlling interest. No? So in my example earlier, this is 20%. And then credit dividends declared by subsidiary. Okay? Then of course, no, so we have to close NCI, net income to NCI. No? So kasi nga, ultimately, yung net income attributable to the non-controlling interest will have to be in your equity, no? Kasi pero uh, we are not keeping a separate retained earnings for NCI, no? So wala tayong ganon. So kaya pinapasok natin siya in whole dun sa non-controlling interest. Okay? Oops, sige. So, ayun. We have discussed the concept, no, on the consolidation subsequent to the date of acquisition. Pero tandaan ka this doesn't cover yet the intercompany transaction. So, sale of merchandise, sale of fixed assets. No? So, there will be a separate discussion on that in the coming days. No? So, discussion problem 1. Let me read the problem first. No? So actually, let me read the requirements first para at least mas mapabilis tayo. So number 1, what is the consolidated net income attributable to entity A on December 31, 2022? So ito class, ang isa pang tip. No? So sabi ko, ang mga tip natin is first, read the requirements first. Number 2, underline mo yung, or highlight mo yung mga dates kasi that's also very important. Imagine, ang tinatanong dito, what is the consolidated attributable net income to entity A December 31, 2022? Pero take note, there are also other items related to 2023. No? So be careful. No? Baka kasi magkamali ka. Number 2, what is the non-controlling interest net income on December 31, 2022? Number 3, what is the non-controlling interest net assets on December 31, 2022? Number 4, what is the consolidated retained earnings on December 31, 2022? 5, non-controlling interest net assets on December 31, 2023. And then finally, consolidated retained earnings on December 31, 2023. So, parang meron ako nakalimutan. Okay, ito na. Sige. So let me read the problem. On January 1, 2022, Entity A acquired 70% of the outstanding shares of stocks of Entity B for 1,500,000. That 1,500,000 is the total consideration. Ito yung binabayad ni Entity A para ito yung binabayad ni Entity A to get 70% of the outstanding shares of stock of Entity B. Okay? The book value of the net assets of Entity A at the date of acquisition. Sino si Entity A ulit? Entity A is the parent. No? Entity B is the subsidiary. So dito, binigay yung net book value of net assets of Entity A at the date of acquisition was 3 million, of which retained earnings amounted to 1.8 million. So tingnan natin kung relevant yun later. On the other hand, the value of the net assets of Entity B at the date of acquisition was 2.8 million. The non-controlling interest is measured at the minimum. O ito class. Pag sinabi kasi, di ba, napag-usapan natin previously, non-controlling interest can be measured either full value method, or goodwill, fair value method, or full goodwill method, or partial goodwill method, or proportionate share. No? So, in here, ang sinabi kasi dito, it is measured at the minimum. Ano ba yung minimum? So, well, pag ganito yung wordings, no, in the problem, it goes without saying that this is proportionate share. So, meaning this represents 30%. Okay, tuloy ko pa. The book value of the asset and liabilities of Entity B equal the fair values. So, okay naman pala. Except, inventory with an inventory which had an excess of fair over book value in the amount of 60,000 pesos. So, yun na. There's an excess, no? An equipment which had an excess of book over fair value in the amount of 80,000 and a note payable bearing an interest of 5% which was understated by 10,000. No? So, um, parang mag-iisip ka na agad, di ba? Kasi kanina pinag-usapan natin, amortization of excess. Pero kung amortization of excess yun, ang hinahanap natin is ano ba yung mga expenses? No? Expenses impacted by those overstatement and understatement in your assets and liabilities. Kasi nga, kung may impact sa expenses, ergo, there will also be impact to the consolidated net income. Okay? So, pansinin natin, pag-usapan natin yung inventory. Inventory relates to cost of sales. No? So, sabi natin, cost of sales generally is treated as expense. No? So there's an impact to your cost of sales. Pagdating sa equipment, may impact naman sa depreciation. Pagdating sa notes payable, may impact naman sa interest expense. So later on, pag-usapan natin, isa natin yan. 30% of the above inventory was sold in the current year and the rest was sold in 2023. O ito class. No? So when the problem is silent, no? So kung ito kasi sumisigaw, so sabi niya 30% binenta ng current year and the rest was sold in the following year. No? So if the problem is silent, let's assume that all of this inventory was sold in the current year. So yun na, tandaan ko lagi yun. The equipment had a remaining life of 2 years. Ito, this is important naman to calculate for the depreciation. No? So remaining life of 2 years. Notes payable was issued on January 1, 2020. It had a remaining term of 5 years. So ito naman, this is relevant in the calculation of interest. No? So we are in 2022. The acquisition was held in 2022. So kung 2020 yung loan, meron pa tayo 3 years. Okay? So net income of entity A, 500,000, 600,000 for 2022 and 2023 respectively. Also the net income of entity B. So ito meaning, ito yung mga separate net income nila in their own books. No? Dividend declared by entity A and dividend declared by entity B. So yan. So parang ang daming data, no? Ang daming information. Isa-isay natin yan. Let's have discussion problem 1. Ayan. Sige. Unahin muna natin syempre yung pag-calculate no difference between the consideration and the fair market value of identifiable net assets. No? So, parang masyado may sige, try natin. Sige. Magkano ba yung consideration? Ito class, this is also one of the templates that I have provided you no, in my previous discussion. So consideration, meaning this is the consideration given up. This is 70%. No? So that's 1,500,000. So yan muna ha. Ngayon tingnan natin yung book value. So sabi natin yung book value of the net assets of entity A, of entity B was 2,800,000 this one. No? Yun nga lang, merong mga adjustments. Sabi kasi dyan, di ba, book value of the assets and liabilities of entity B is equal to the fair values. No? So lahat daw equal except for 3 items. So meron tayong inventory, sabi, an inventory which had an excess of fair over book value in the amount of 60,000. So understated yung inventory natin. So kung understated ang inventory natin versus the fair value, so we have to add it. No? So additional. Next, an equipment which had an excess of book value, over fair value in the amount of 80,000. So meron namang overstatement no, in our equipment. So we have to adjust it. No? So minus 80,000. A note payable bearing bearing an interest of 5%, which was understated by 10%, by 10,000. So understated ng notes payable natin. And since liabilities to, no? So we understate, kung ang liabilities natin are understated, then we have to deduct it. So after that, makukuha na natin tong other factor. No? So this is the fair market value of identifiable net assets. So tandaan na, identifiable net assets. No? So meaning these are all your assets and liabilities in the balance sheet, no, which are identifiable. So kasi meron tayong isa pang yung mga intangible assets, no, especially goodwill, no. So the goodwill is unidentifiable asset. So we have to exclude that in the calculation. Okay? So now, pag-usapan ngayon natin tong NCI. So sabi kasi natin, ang NCI, the non-controlling interest, is measured at the minimum. No? So if it's measured at the minimum, sabi natin, the method to be used is proportionate share. So meaning, it's 30% of the fair market value of the identifiable net assets of entity P. So in this case, 2,770,000 multiplied by 30% para makuha natin to 831,000. Okay? So, excuse me. So with that, kompleto na yung mga factors. So we have 2,330,000 total aggregate. Compare ngayon natin dun sa fair market value ni entity B. No? So in this case, meron tayong gain on acquisition. Kasi kung napansin mo, ang binayad lang natin 2,331,000, and yet, yung total fair market value is 2,770,000. So meron tayong gain on acquisition amounting to 439,000. Ito ha, the standard will require us to revisit. Check nyo. Double check nyo muna kung tama ba yung valuation ng entity B. Kasi nga, this is very rare. Imagine, no? You are purchasing an entity below the market value. So, that's why may gain ka. Para kasing ganito yan, no? So, bibili ka ng kotse. No? Bili ka ng kotse, syempre, ang bentahan is the fair market value, and yet, no, it's being offered to you at a bargain price. No? So, kaya, reassess. Okay. So, kung meron na tayo ngayon ganyan, no? Meron na tayong gain on acquisition, so, tignan muna natin yung excess naman. No? So, analyze natin yan based ngayon dito sa cheat sheet natin. So, hindi ko napapakita yung mga pinag-usapan nating detalye kanina, gamitin na natin itong cheat sheet para at least mapatunayan natin if this will work or not. So sabi natin, inventory is understated. Okay? Clear na tayo dyan kasi mali na naman sa problem, no? That there was an understatement in the value of the inventory. Ngayon, kung may understatement sa value of the inventory, paano yung allocation? So sabi natin, no, ang understatement in the inventory will impact your cost of sales. No? So kung may impact sa cost of sales, may impact sa total net income. Ano ngayon yung impact ng understatement ng asset and liabilities sa expenses? So sabi natin, kung understated yan, ang expenses mo is understated din. Pero paano natin split? So sabi dito sa problem, no, yung 60,000 daw na yun, 30% was sold in the current year and then the rest in 2023. So we just have to split this. No? So 60,000 multiplied by 30% for 2022 and then 70% naman for 2023. Kaya nalagay ko siya relates to cost of sales para lang at least may guide tayo, no, kung ano yung related expense item that will be impacted by the inventory understatement. No? So kung mamaya na tayo dito sa net income, dito muna tayo sa mga expenses. Equipment naman, overstated daw. So meron tayong 80,000 na overstatement sa equipment, pero ilan ba yung remaining useful life na lang? 2 years. No? So 80,000 divided by 2. So 40,000 for 2022, and then 40,000 also for 2023. Ngayon, depende, no, kung ilang years na lang yung remaining useful life para ma-assess natin kung hanggang kailan siya magkakaroon ng impact sa consolidated net income. Okay, kaya lagay ko din siya relates to depreciation expense. Now, kay notes payable. Notes payable, it's a liability. Sabi natin dyan, understated ng liability. Pag understated ng liability, understated din ng expenses. Anong expense naman yan? Relates to interest expense. Magkano yung interest expense? Sabi dyan, 10,000 yung understatement multiplied by 5%. So that's 500 pesos. O ngayon, meron na tayong analysis for each line. So kunin lang natin yung sum. No? So kung meron kang 18,000 understatement, meron kang 40,000 overstatement, and then 500 understatement. So meron ka in total 21,500 overstated. No? So paano ko naman nakuha yung 21,500? No? So meron ka dito 40,000. 40,000 less 18,000 less 500. So that's 21,500. Puntahan ngayon natin itong 2023. Sa 2023 naman, meron kang understatement na 42,000 less 40,000 plus 500. So meron kang total 2,500 understatement. Mamaya pag-usapan natin ano yung impact nito sa net income. Lagay ko muna ito dito. Pag-usapan ngayon natin yung consolidated net income. O ito, yung consolidated net income, this is similar to what we have discussed earlier. Sana kita pa rin na maayos. No? Like kung i-fix para at least kita lang siya sa screen natin. Okay? Sige. So, it's the same template. No? Lahat yan na pinag-usapan nating template, isisin lang natin ano yung mga factors, ano yung mga kailangan nating ilagay. No? So, parang siyang puzzle. Kasi nga, when you have the template, so all you have to do is pick up the numbers. But it has to be the correct numbers. No? So, net income parent. So, sabi natin, net income parent, this is 2022 muna ha. Lagay ko dito, year 2022. So, meron ka 500,000. Saan galing 500,000? Yan. From the operation, no? Own statement of entity A. So 500,000. Net income subsidiary. So net income of B is 320,000. But we have to split this no, based on the proportionate share. So that will be 320,000 multiplied by 70% for parent. And then 320,000 multiplied by 30% for the non-controlling interest. So, pansin mo ha, in-split lang natin itong 320,000. Pag-usapan ngayon natin itong amortization of excess. So, ito na inantay natin kasi nga na-compute na natin, di ba? Magkano nga yung overstatement sa total expenses? Sabi natin, 21,500. Kung overstated ang total expenses natin, so therefore, the net income is understated. Kung understated na net income, all we have to do is add it no? Para makorect yung net income. So kaya, pero paano natin siya i-allocate? Again, using the proportionate share. No? So that's 21,500 multiplied by 70%. So that's 15,000. Ayan, since we're using Excel, no? So lahat yan naka-formula para at least mas madaling it-trace no? When you're doing your own review. So that's 21,500 multiplied by 30% for the non-controlling interest. No? So okay na tayo dito sa amortization of excess. Now, there's no mention about the impairment loss. So it's zero. No? Intercompany dividends. So ito, si entity B nag-declare ng dividends. No? So sabi natin, no? Since company A owns company B, ilang percent nga? 70%. No? So ayaw naman natin ma-double take up yung intercompany dividend. No? So what we have to do is we'll need to deduct this. No? So magkano ba yung dividend declaration? 70,000. Magkano yung stake ni parent? 70%. No? So 70,000 multiplied by 70%. No? So we have to deduct this. Again, dinideduct natin to para hindi ma-double take up yung dividend income. And then finally, we have gain on acquisition. So itong gain on acquisition, yan lang naman yung na-compute natin kanina. So 439,000. Tandaan ulit na ang gain on acquisition is only taken up once, no? During the year of acquisition. No? So the following year dapat wala na to. Okay? So we'll just get the sum. Ayun na pala, pwede natin makompute yung requirement number 1. What is the consolidated net income attributable to entity A? Sabi dyan, 1,129,050. Ayun, so letter C. Eh magkano naman yung non-controlling interest net income? So that's 30% or 102,450. Okay? Ngayon, paano pag tinanong how much is the consolidated net income? So all you have to do is add these two. No? So that's 1,231,500. So observe muna para at least pwede tayong mag-proceed sa susunod. Anyway, meron pa rin pa naman tayong isa pang problem to illustrate this. So siguro ang takeaway lang dito is dapat tama yung take-up ng amortization of excess. This is very important. Why? Kasi kung ito, parang yung iba kasi is easy peasy na eh. So like net income from parent. No? So pipick upin mo lang yun. Net income ng separate operation. Net income subsidiary. I think ito talaga yung pinaka-challenge dito. This is challenging kasi nga you have to first analyze if it's overstated or understated. Pag dun pa lang sa memplang ka na, problema na yun eh. Kasi kung tama yung analysis mo as to whether the asset or liabilities are understated or overstated, kung naitama mo yun, wala ka ng problema kasi meron ka ng cheat sheet. No? So, yun lang yung kailangan mo i-analyze na part. Pero I don't think you will struggle with that kasi nga, pag mataas ang fair value, o, di ba, ang basis natin is fair value. Pag mas mababa, ito understated. Well, tignan mo kung asset or liabilities. No? Then the treatment, of course. Okay? Sige. Let's proceed with the other requirements. No? So, puntahan ngayon natin to. Ako lang to para kita pa rin. Kasi ang next requirement natin is non-controlling interest in the net asset. No? Non-controlling interest in the net asset. No? So, kunin ko lang ulit yung mga yung template natin. So, we have non-controlling interest beginning. Tandaan, ang non-controlling interest beginning at the year of acquisition, this represent yung share ni non-controlling interest. Ito yung na-compute natin kanina. Sabi natin, di ba, using the proportionate share. Kung naalala nyo pa, huwag mo nakakalimutan agad, ha? Ito yung portion na to. This one. Ha? So that's 831,000. Oops. And then NCI net income, ito yung kaka-compute lang natin. This one, 102,450. Kaya kung napansin mo, no, pag naitama na natin yung consolidated net income, the rest will be just like a puzzle. And then of course, dividends declared by the subsidiary. So magkano nga yung dividend declaration by the subsidiary? 70%. Pero only yung proportionate share lang. So that would be 30%. No? So the answer is 912,450. So just get the sum. Okay, so that's number 3. Puntan natin yung requirement number 4. Sa requirement number 4, class, okay. Sa requirement number 4, ang pinag-uusapan naman natin is consolidated retained earnings. So sabi natin, consolidated retained earnings, ang consolidated retained earnings on the year of the acquisition, this represents the parent's retained earnings. So, tingnan natin ngayon, meron bang data sa problem, no? In relation to the parent's retained earnings. Ayan, that's 1,800,000 at the date of acquisition. So, that's 1,800,000 plus CNI parent. No? So, this is also the one we have computed earlier. So, that's 1,129,050. Less the dividend declared by the parent. No? So magkano yun? So yun, 110,000. So get the sum. So meron na tayong consolidated retained earnings ending. So that's 2,819,050. Okay, so that's requirement 4. Sige, puntahan natin yung requirement 5 and 6. Sa requirement 5 and 6, pansinin nyo class ha, ang tinatanong na is December 2023. So therefore, we have to calculate for the consolidated net income ulit for 2023 naman. So, lagay lang ulit natin yung template. Isa-isayin ngayon natin. No? Net income parent, 2023 nito class ha, year 2023. So, huwag magpapalito dyan. 600,000 from parents' own operation. And then ngayon, net income subsidiary, sabi natin, we just have to split it based on the proportionate share. 280,000 multiplied by 70%, that's 196,000 for the parent. And then the 30%, 84,000 for the non-controlling interest. Ito ngayon ulit. Pag-usapan natin ulit yung amortization of excess for 2023 naman. Sabi natin, the total expense is understated by 2,500. Kung understated ang expense natin, overstated ang net income. No? So, kung overstated ang net income, we have to deduct it. No? So, paano ngayon yung split ulit based on proportionate share? So, that's 2,500 multiplied by 70% for the parent, and then 30% naman for the non-controlling interest. So I hope nakakasunod ka. No? So there's no impairment loss ulit. And then intercompany dividends, ito ulit yung dividend declared by entity B. No? So then proportionate share to parent, that's 70%. No? So that's 60,000 multiplied by 70%. We have to deduct this again. Kasi nga, if not, double take up yung dividend income. Ayaw natin. Ito na, pansinin mo class, gain on acquisition. So sabi natin kanina, gain on acquisition should only be recorded once, no? The year of the acquisition. So this time kasi, this is year 2 na, no? So therefore, there's no gain on acquisition to record. Okay? So get the sum para makuha mo yung consolidated net income. Pero hindi yun yung question. No? So puntahan ngayon natin yung requirement. No? So number 5, what is the non-controlling interest net assets? No? Balikan ulit natin yung template para at least kita mo na agad. So this one. So, similarly, no, gamitin natin yung template, meron ka dyan non-controlling interest beginning. So, ano nga itong non-controlling interest beginning? Siyempre, yun yung ending mo ng 2022. So, this one, 912,450. Plus NCI net income, ayun, kakakompute lang natin. That's 83,250. Dividend declared by the subsidiary. So that's 60,000 multiplied by 30%. So the non-controlling interest ending balance mo would be 977,700. So letter D. Para naman doon sa consolidated retained earnings natin, so beginning balance also the one that we've computed earlier, that's 2,819,050. And then CNI parent, no? So that's 752,250. And then of course, we have the dividend declared by the parent. No? So that's 150,000 pesos. Deduct mo lang para makompute natin yung consolidated retained earnings ending. No? So that's 3,421,300. Okay. So, ayun, sabi ko medyo heavy yung discussion sa consolidation. No? So this is just part 1 no, ng consolidation. Meron pa tayong parts 2 and 3. So, but kung napansin nyo naman, we're introducing templates no, para at least, ano yun, kung may template ka na, madali na lang maglagay ng numbers. Yung suggestion ko palagi, try to write down. Kasi while we're doing this online, nakikita mo, Excel template, nandiyan na lahat. Pero in actual CPA board exam, you don't have this, no? You don't have the Excel file to aid you in your calculation. So you have to write it down. Kaya nga palagi kong sinasabi, sana yung sulat mo, mababasa mo. Kasi imagine, no, kung halimbawa, succeeding questions pala will also, for example, this 2023, meron palang kailangan ka na 2022 numbers, no? So kung kung hindi mo naiintindihan sulat mo, you will end up recalculating 2022, nagawa mo na yun, no? So it's a total waste of your time. So kaya pagandahan talaga magsulat. Hindi naman pagandahan. Para lang, siguro, kung naiintindihan mo yung sulat mo, okay na yun. No? So, pinaka-worst kasi mangyari is sarili mong sulat na hindi mo naiintindihan. Okay. Kaya nga nung undergrad, ang ganda ko magsulat eh. Yung tapos na yung, nung nakagraduate, hindi na ako ganun kaganda magsulat mo compared sa undergrad. Ayan, sige. So, discussion problem 2. So, same concept. Check lang natin, no? Para at least ma-cement yung understanding natin. No? So, requirements, what is the consolidated net income attributable to entity A? What is the controlling net income? What is the non-controlling interest net income on December 31, 2022? What is the non-controlling interest net assets on December 31, 2022? And number 4, what is the consolidated retained earnings on December 31, 2022? So let me read the problem. On January 1, 2022, Entity A acquired 60% of the outstanding shares of stocks of Entity B for 3 million pesos. The book value of net assets of Entity A at the date of acquisition consisted of ordinary shares in the amount of 1 million, APIC in the amount of 2.5 million, retained earnings in the amount of 2.4 million. On the other hand, the book value of the net assets of Entity B at the date of acquisition was 2,200,000, including a goodwill in the amount of 250,000. The non-controlling interest is measured at fair value in the amount of 1,300,000. Yan. The book value of the assets and liabilities of Entity B equal the fair values except an inventory was overstated. Yan na. And the machine was understated by 200,000. The machine had a remaining useful life of 8 years. If the result of the business combination was a goodwill, it was impaired in the amount of 75,000 in the current year. Ayan, meron pang impairment. The net income of Entity A was 700,000 and net income of Entity B was 430,000 at the end of the year. Dividends declared by A was 220,000 but only 200,000 was paid. So irrelevant na to yung payment, no? Kasi di ba we post the entry at the declaration. On the other hand, dividends declared by Entity B was 130,000 but only 100,000 was paid. Sige, isa-isahin natin yan. Let's have problem number 2. So problem number 2, of course, let's begin with the yung template natin to compute for the goodwill. No? Of course, we have the consideration given, that's 60%. No? So that's 3 million. This should be 40%. Book value of net assets of Entity B, that's 2,200,000. Sabi, overstated ang inventory. Kung overstated, ibawas. Sabi naman, understated ang equipment by how much? 200,000. So, idagdag. Now, itong goodwill, no? Sabi natin, what we're only accounting for in the business combination, in this case, acquisition, are the net identifiable assets, no? Identifiable net assets, no? So therefore, we have to deduct the goodwill. Why? Kasi nga unidentifiable asset ang goodwill. Hindi mo nahawakan. So that's minus 250,000. So now we have the fair market value of the identifiable net assets amounting to 2,105,000. Okay. Next. So, ang NCI natin, sabi naman kasi dito, non-controlling is measured at fair value in the amount of 1,300,000. So, okay yan, provided, i-test muna natin kung allowed ba siya ng standard. Kasi nga, the standard doesn't allow if the non-controlling interest will have a negative balance here. Kung may gain, hindi papayag si standard, no? So standard doesn't allow that. So test natin siya, no? So same, no? Same pa rin naman. Ilagay lang natin dito sa template na to. So we have fair market value of the net assets, no? So that's 2,105,000 allocated based on the proportionate share. So that's 1,263 for the controlling interest, and then 842 for the non-controlling interest. Ito ngayon yung gusto kong i-test. So, kung 1,300,000 dyan, 842,000. So, positive. So, okay. Allowed by the standard. Pero what if the fair market value is, sabihin natin 800,000. Ano lang yan ha? Lalagay lang ng values. No? So, yan. If this is 800,000, tapos 42,000 negative, no? This is not allowed by the standard. So, therefore, what we're going to do is we'll use 842,000 as the minimum share, no, minimum valuation for the non-controlling interest. No? So, like I said, I have discussed this in detail, no, in my previous discussion. So please take time to rewatch that. So balik ko lang yung data natin. Okay. Of course, pag-usapan ngayon natin itong excess. No? So sabi natin, meron daw tayong overstatement sa inventory. Kung ang inventory is overstated, expenses is also overstated. So yun lang muna. Oops. So sabi natin class, no? The problem is silent as to when the inventory was sold, no? So therefore, we'll assume that this was sold in the current year, no? So that's 45,000. Yung overstatement naman sa equipment, actually hindi pala overstatement, understatement. No? So the equipment is understated. So expenses is also understated, pero by how much? So sabi natin, magkano ba yung understatement sa equipment? 200,000. But it has a remaining useful life of 8 years. So that's 25,000 understated. So kunin natin yung total impact. No? So that's 45,000 overstatement and the 25,000 understatement. So that would be 20,000 overstated. So kung meron na tayo niyan, puntahan na ngayon natin yung calculate yung template natin, no, sa consolidated net income. So, net income parent, given naman, that's 700,000. Net income of the subsidiary, that's 430,000. Sabi natin, we have to split this based on the proportionate share. No? That's 430,000 multiplied by 60% for the parent, and then 172,000 for the non-controlling interest. Ito na. So sabi ko sa inyo, this is very important, no? The amortization of excess. So since meron na tayo initial calculation dito, alisin ko pa. So, ang expenses natin is overstated. Kung overstated na expenses, so understated the net income. So all we have to do is add it back. No? So that's 12,000 kasi 20,000 multiplied by 60%. So 12,000 for the parent. And then 8,000 naman for the non-controlling interest. Okay. Puntahan ngayon natin itong impairment loss. In terms of excuse me. In terms of the impairment loss, ang allocation niyan is not the proportionate share, no? We'll allocate the impairment loss based on this schedule. So ito, kasi nga 'di ba meron na silang allocation how much goodwill will be attributed to the controlling interest and how much goodwill will be attributed to the non-controlling interest. So therefore, we also have to record the impairment loss based on this split, no? So gawa tayo ng ratio, no? So paano 'yan? So how much mo na ba yung impairment loss? So it's also given. The impairment loss was 75,000. So 75,000 multiplied by 1,737,000 over 2,195,000. So proportionate lang. Ginagawa na natin ng proportionate. So it's so 79%. And 21%. So 79% punta kay controlling. So 75,000 multiplied by 79%. So that's 59,351 minus. And then 15,649, no? For the non-controlling interest. So okay na tayo doon. Puntahan ngayon natin yung intercompany dividends. Pagdating sa intercompany dividends, it's also given naman. No? So that's 130,000 declared by entity B. Tandaan, no? So upon dividend declaration, meron na tayong entry, no? So irrelevant na tong payment, no? So that's 78,000 minus, no? So that's 130,000 multiplied by 60%. So get the sum. So 832,649 for the consolidated net income attributable to the parent, and the non-controlling interest net income of 164,351. So yun, sagutan natin yung requirements 1 and 2. Okay. So sabi ko sa inyo, no, just by using this template, na-address natin, imagine, no, dalawang questions, dalawang requirements in one template. No? So it's really hitting two birds with one stone. No? So maganda yung template natin. Puntahan ngayon natin yung next requirement. Pero bago yan, kunin ko na muna ito para at least nakikita natin yung template side by side. O, sige. Ang next requirement is non-controlling interest, net asset, and then consolidated retained earnings. So meron tayo ditong non-controlling interest beginning. So sabi natin, this represents the year of the acquisition, this represents the share, no? In this case, the fair value. So it's 1,300,000. Anyway, tinest naman natin, no? And it's allowed by the standard. So that's 1,300,000. Non-controlling interest net income, ayun, yung kinompute natin. That's 164,351. Dividends declared by the subsidiary. Pero yung proportion share lang. So that's 130,000 multiplied by 40%. So get the sum, that's 1,412,351. So that's letter B. Puntahan ngayon natin yung number 4. Consolidated retained earnings beginning, sabi natin, the year of the acquisition, this represents the parents' retained earnings. So that's 2,400,000 given naman. CNI parent, no? So yan yung na-compute natin kanina, that's 832,649. And finally, we have the dividends declared by the parent, so also given, so that's 220,000. Wag lang magpapalito, no, class. Nilagay lang ito, masyado masipag mag-type yung nagawa ng exam na to. This is from the previous CPA board exam. No? Imagine, no? Nilito ka pa. Binigay na yung dividend declared, pero binigay yung payment. Alam mo naman, natutunan natin na that's irrelevant, no? in the case of the calculation of the retained earnings. No? Kasi nga, di ba, upon the date of the declaration, meron na tayong entries. No? So get the sum, the consolidated retained earnings, ending would be 3,012,649. Ayun, letter B. Okay. Ayun. Picture is worth 1,000 words. Anyway, so thank you again, no, for attending this class. That's all for today. So stay safe and stay healthy, and see you again next session.
This has been your instructor, Mark Gibson. Thank you for learning with us. See you in our next discussion. Don't forget to like and subscribe. See ya!